back, everyone. It is 2021. It's the 3rd of January, Sunday, the 3rd of January, and I'm going to be having a look at the major commodities. I'm starting off with just having a look at the metals calendar, just to see any particular items that might cause disruptions in the markets. And just looking here, seeing Wednesday out of the US, obviously we've got non-farm employment change, ADP. We've got FOMC on Wednesday at 7 p.m. in the evening. And then Friday we'll have non-farm as well, the actual official non-farm number, and then unemployment. Obviously a variety of different US high-impact news announcements that could disrupt the markets. Looking at the energies, looking at oils at any rate, at the energy commodities, we've got Monday. I mentioned this in my previous video. We've got, and again, so we'll have that throughout Monday, and there could be some disruptions across some of the crude oils, as well as then having a look at some gasoline as well, natural gas, and so on and so forth throughout the rest of the week. So there's just a little bit of news, but it's high impact every other day. So just keeping an awareness of those. I just keep an eye on these particular instruments around those particular times, especially for intraday traders. Then moving on to the charts, having a look at gold. So this is very cool. Gold has kind of now continuing on its uptrend. There's a small shift in price action. It's becoming a little bit more fluid, kind of struggling to get through. It was previously struggling to get to this level of resistance around 1885. It now looks as though it's broken through. It's going to bump its head up against 1900, but I think it's pretty much going to break through that, which means it's going to head up towards 1950. I think it's relatively safe to say we spoke about, or at least I spoke about, finishing off December with a nice bullish monthly candle. I think it's safe to say that's where we are. And therefore, we've now satisfied the criteria for a minimum monthly retracement. If this is the case and gold is going to head up from here, this is a very nice bullish minimum retracement, and therefore this trend is quite nice and strong. And the implication being that we're going to see price head out, gold head up towards 2200. So that looks pretty cool. We are technically still in a downtrend on the weekly time frame, but I think once we break up above that 1900 level, what I would really like to see are some pullbacks in to test that level and looking for buying opportunities heading up towards 2000. I think at the very least that looks to be the case. I'm going to wait for it to break through that to confirm for me that it is comfortable in doing that. Looking at silver, silver's bumping its head right about here. It's struggling, but it has managed to get to the other side of the monthly support resistance level. So that in itself is a relatively bullish signal. I'm happy with that. Supporting the idea here that is certainly where it is going to try to continue up to. Let's have a look at copper. So copper here is starting to produce lower highs. It's obviously overextended. It is now kind of in the throes of a weekly correction, at the very least, if nothing else. And so I would expect to see price kind of come down here towards 3.45, potentially down to 3.3, but I think a minimum healthy retracement would be to test this for support. And I'm not really going to look to do anything on this until it gets back over that 3.6 level. So we'll have a look at that. Let's look at platinum. Platinum might as well just head up here and hit 1.1. That's a really nice bullish candle in December. Sorry, weekly candle, that second last week of December. And then looking for this bullish one. So that all looks pretty good. I mean, it's a break and a retest of these previous highs. That monthly candle looks really good. We've got a monthly uptrend. All of that looking nice and bullish. But 1.1 you can see here is quite strong resistance. I'd like to see it ultimately break through that. I think it's done enough of a correction on both the weekly and the monthly that if it does ultimately break through that, that's acceptable. It's not overextended. It shouldn't be weak. I can see that happening. But I do want to see how it reacts against this 1.1 level. And if it does tap it and then pull back into the previous highs and then take another run at it, then I might be anticipating a breakout at a later stage. But the longer term so far still looks really nice and good. Ultimately expecting it to break out above that. Palladium now looking also really nice and bullish here. Kind of a lot of this messiness and spikiness start to strengthen up here, but that really just makes the most sense that individuals are now likely back from their holidays, likely to return to the markets, and therefore there's some actual commitment taking place, kicking off the year with committing to some of those moves. I wanted to get through this patch, start to see it break up above that. Overall, it still looks nice and bullish. Again, all of these looking bullish. There's no signs of any reason why they couldn't continue on. Then having a look at West Texas Intermediate. Uptrend here, based on this price action, it's going to take another run at 50. It does look a little bit weaker on the weekly side. It actually looks as though it's kind of keen on doing a pullback down towards 45. But that monthly as well, looking fine. Look, 50 is at least the roundest most significant monthly support resistance level that I can find here. So if it does take a move up to that, then I'll have to reassess what it does. If it breaks through that, then I think we're going to start heading up towards 60. If it fails to do that and just actually stalls where it is and then breaks down last week's low, then of course it starts to imply that it's going to hit a little bit low. But that daily in isolation combined with the other commodities we've looked at so far look more bullish than bearish. The same applies here for Brent crude. Looks exactly the same analysis. It's so close, might as well just head up to 53, which is the next key level I have here. Light crude, all of them the same. They have exactly the same thing. The weeklies look as though they're prepared if they break the low of last week, or at least the week of the 21st of December, then the potential for them to come back to test the previous monthly support resistance levels is a possibility. The dailies look really nice and bullish. The monthlies look really nice and bullish, and therefore they look almost like a 65-35 that they're going to head up instead of down, and so they do look that way. Let's have a look at Bitcoin. So we've had some amazing, there's just no other way to put it, we've had some amazing growth on Bitcoin, way more than I was anticipating, and that's fine. At least it's continued with the trend. At some point, of course, there is going to be a reckoning, at least a correction. What's interesting about this now is where my correction was originally going to be about the 12,000 to 13,000 area. It now might actually be a little bit higher. It might be the 20,000 to 14,000 area. So this area now being potentially where it's going to correct to. The candles are getting significantly bigger on the weekly. I'll be looking for a smaller candle and looking for a correction there. And right now, the daily looks really nice and healthy. So pullbacks at this point look okay so far. No signs of any concerns or any weakness in that price action just yet. No divergence at any rate. That looks like that could be a bit of a rejection of 35,000. The longer term, I'm still confident that cryptos are going to be here to stay. But we do now need to have a bit of a correction. We're seeing almost like a whole new shift in terms of potentially even now the appreciation of cryptos. We'll see how that goes. But pullbacks towards 20,000 at a minimum for me make the most sense when it happens. So it just means higher risk on the intraday moves because they're clearly quite extreme. And it does mean to me that potentially price coming back down to 14,000 to 12,000 is still a possibility, but it's now the least, it's my kind of my plan C as opposed to plan A. Let's have a look at Ethereum. Compared to the two, it's really nice. Ethereum was not really as overpriced. That's a really large candle, quite big. And so look, you'd see that take a bit of a reduction, maybe 1,000 being a nice little point for it, a nice round number significantly to see that have a correction and then coming back down towards 500 or potentially 450. So I'll reassess that. It's higher risk for me in terms of trading opportunities right now, but I do like to see this. We've got what we do have, which is really good, is a monthly uptrend, weekly uptrend, and daily uptrend. So all of those are aligned, but we are now without a doubt overpriced on the monthly as well as weekly as well as daily timeframes, and therefore a correction is due. What I'm looking for is, as I said, a smaller weekly candle. If that is going to be the case, that'll potentially be this week or next week, which means that within the next 2 to 3 weeks, if that is going to be the case, there will be a bit of a swing high and potentially then a correction over the next 3 to 7 weeks. And so that's what I'll be looking for. Okay, I'm going to wrap that up on commodities, and yeah, everyone trade safely.